All right, so let's get into stocks. All right, so we've had a lot of folks in here have bought stocks, right? Invested in stocks, traded stocks. As Mark mentioned, we're trying to help people to become investors and not necessarily traders. There's a lot of ads and things out there that talk about how to trade the markets, how to do this, how to do that. The next biggest stock, the next best stock that's going to go up, the best tech stocks to buy. There's a lot of noise out there. And so what we do is really sit down and help our folks that we're talking with, whether they're new investors or experienced investors, to figure out what's going to be the best for them depending on the level of risk they want to take. When you invest in any market, there's risk, and some are more riskier than others, and the stock market tends to carry the most risk. And within the stock market, there's different levels of risk as well. So a stock in its pure form, or a common stock, is basically a ownership of that company. So when you buy one share of stock, you become a shareholder, and you become technically an owner of that company. And so you have the ability to vote at shareholder meetings on things like the board of directors, who the next CEO is going to be, things of that nature, as well as corporate policy. But really, people buy stocks to appreciate their wealth, to grow their wealth. And they're really buying it to invest either for a short-term trade or for the long term. And so when we own stocks, we make money in two ways. One is from the appreciation or the profitability of that company. Okay, so if that company is growing profits and continuing to do so, then we're going to hopefully that stock that we own is going to go up in price. The other way that we make money in a stock is kind of similar to a bond, and that's from the income that it might pay in the form of what's called a dividend. And typically they're cash dividends. We'll just refer to dividends as cash. And so they're going to give you some cash for owning their stock. And so what happens is there's different types of stocks. Some companies, the different type of companies. Some companies may pay out some of their earnings and profits in the form of a dividend. Some may take all of their earnings and profits and roll it back up into the company to grow the company and do more R&D and development by other companies and things like that. So the companies that tend to take all their earnings and put it back into the company are oftentimes referred to as growth stocks. And so they can be small, medium, or large. We'll get into those in a second. And then the companies that oftentimes pay out a dividend or take their earnings and pay out a dividend to their shareholders are value stocks. Now there's some growth stocks that do pay dividends, like Apple actually pays a pretty good dividend and it's considered a growth stock. But for the ease of the conversation, we'll refer to those as growth and value. Okay? Now within the stock market, there's different types of stocks. How many of you have heard of large cap stocks, small cap stocks, international stocks? Have you heard those terms before?